Kim here with the Traders Club. Welcome to the market update. Today is Saturday, and I actually like to change things a bit. Friday, you know, you got kind of go through the whole week trading, go through with your days of work, and I love to do market analysis on Saturday when market is closed and quiet, kind of in a more peaceful manner, right? So once in a while I like to change it a bit, and it's so much more quiet today. Market is closed, and so let's I got quite a bit of ticker today, as you can see over here. I'm gonna go through all of those today, and it's gonna be, hopefully it's not gonna be too long, but I'm gonna just kind of recap things very quickly. We've been analyzing the market since the, very intensively since the early part of this year, and the market has been, seeing very aggressive V-shaped reversal, V-shaped recovery. I like to call it a rescue mission from the bulls, and has cultivated and reclaimed many of the crucial levels, right? So we've been talking about those. We've been tracking gaps throughout these months here. So today we're gonna just put all together, kind of look at things more of an intermediate term perspective, and we'll go from there. Also, I do have a special membership invitation for investors only, for long-term investors. If you are if you invest in the equities, right, individual companies, and you like to hold things long term, and you like to accumulate multitude of stocks for capital appreciation, I do have special membership invitation at the end of this video, and that invitation or that promotion will last. I'll put that up until Monday, which is the 8th, right? The 8th, Monday at noontime, Eastern time, at noon. So you guys have plenty of time to think about. But towards the end of this video, I'll talk about that. And that promotion will be only for long-term investors who wants to accumulate multitude of stocks for and I only get into stock, and I'm going to go through these. I'm only going to get into stocks that are extremely undervalued, that has a potential for a big growth down the line. And you know how I feel about long-term forecasts, right? We still have so many people calling for a crash, calling for a recession, calling for 1929 depression and all that, and that's something we've been hearing about since 2016. You guys know how I feel about the overall market, and if you want to learn more about it, there's a video, right? The 15-year bullish run, the title, the 15-year bullish run. That video was published in the midst of while everyone was in total panic. Right, that was end of December, that video. So basically when everybody was calling for a massive crash, I'm calling for a massive bullish run. And so you can watch that if you haven't, kind of get a good feel of how I feel about why I believe that we're gonna see one of the biggest bull market in history. And if you've been following me since late December, early January, and a lot of you guys have been following for years, really, since early 2016, maybe even before that. But when your foundation is solid, understand the long-term implication and expectation and validation of these long-term trend and where the market is going to go long-term, then when you see a sharp decline like this, you see this as an opportunity while everybody else is scared and hit that exit button. This is a reason why I was able to achieve what I achieved so far as the account gains is concerned, as far as year-to-date gains, which is all publicly disclosed in my membership channel, or the page, which I'll go through at the end of this video. Let's start with the spider today. Diamond, Qs, Russell, Semi, Banks. I wanted to add the housing or the home builders, and then Twitter, Intel, Apple. These I want to share with you just so you get a feel of what kind of stocks that I like to buy. Like last year, everybody was buying FANG stocks. Facebook, Netflix, Amazon, and Apple and all that, right? Last year, my portfolio, I had none of those. And I do not chase overvalued stocks. When everybody was chasing FANG stocks, I was buying Twitter, Intel, Cisco, and others. The stocks that weren't popular. And then this year, early part of this year, late last year, when those FANG stocks coming down 40 to 50% decline, that's when I started buying what? Netflix. I started buying Apple, started buying those dips on Apple, and I started buying Facebook. I didn't buy Amazon though, but those things. And I also have many new positions I've accumulated this week. So I thought, if you're a long-term investor and you like to hold multiple stocks, so I have a lot of stocks that I've been buying since early 2016, but also got some new positions, new fresh names this week. A lot of them too as well. And again, these are positions that are extremely undervalued for potential for big growth next several years. So let's start with the spider here. I'm going to just do a quick recap and then we'll go to the promotion there. Obviously, we've been talking about this right here. This kind of like a rising channel type. There's a box, because I look at that as a massive trap. Or I call it like a gatekeeper, right? Market wants to see a huge move, but market does not like it when everybody think that it figured out and it's going to continue higher. And I know something that I talked about in that video, the 15-year bullish run video, is that, I don't know if I talked about it then or some other video, but what I talked about is a lot of people missed out 2016, 17, 18 run. And those people, a lot of bears who lost a lot of money for shorting, and a lot of cash people who got scared that missed out entire 60% runs from 2016 lows to 2018 highs, 60% on the S&P, 100% on the NASDAQ. They missed out on that run. What do? Bears turn bullish, cash people start going long, start accumulating positions. Hedge funds, who's been wrong for the last 3 years. Statistically speaking, all the research is out there if you look for it. 90%, 95% hedge funds always not able to hit the benchmark, meaning able to beat S&P. A lot of these hedge funds usually cannot able to perform. What do? They've been losing money. They thought it's going to be a short in 2016. They thought crash was coming. And then they start jumping in, and then market does not like that. What does the market do? You start chasing it up here. Market gives you that punch and knock them out. I heard thousands of hedge funds close at the end of, I don't know if thousands or maybe hundreds, at the end of 2018. And that's what that was, right? And so again, this is what happens. You start chasing. I met so many people last year that they're so happy. Oh my God, like Nvidia, Amazon, these stocks gonna go on forever. And then all these stocks came down 50%. Again, none of those stocks were in my portfolio last year because I do not chase these, high-flying stocks. But now that some of these stocks came down a lot, it's much more attractive to buy, which I'll talk about at the end of the video here. So looking at the spider here, we see that V-shaped reversal, which I was anticipating a V-shape, one of the fastest reversal. Right, and that's what we saw here again. This is a lower high right here. This is a high, lower high. Bears got nothing because what is the definition of downtrend? Lower highs and lower lows. Now we are cultivating a higher high, right? V-shaped reversal, we got about 20-25% run here. And then you can see that we cultivated higher high. And this was that important level And you can see that we're clearing that level. This doesn't mean the market is going to just go straight up and always like this. Sooner or later, we're going to have a much, much bigger volatility. When? Well, see, a lot of people was wondering that this thing is going to come down much, much lower. Think about it. If you close out your positions up here because you're scared, and then, you know what I mean, this thing keep going high, you're not going to buy jumping into it. And then when it comes about 280, most people are thinking what? Remember, you guys, CNBC, the chart master, came in and said this thing is going to come down to 260 because this is the low, and then maybe even go down to retest 230. Well, people are brainwashed watching CNBC. They're like, okay, yeah, of course, we got this big move. You know what? It makes sense to see a steeper pullback, right? A steeper pullback. That's what everybody was thinking. Do you know what happened? Market is not going to give you what everybody's thinking. And this is something that I've tweeted out before that, you know what I mean? Like, market is not going to give you, you know, the perfect entry for you to get in. You know what I mean? Once you miss your entry, market is not going to give you the perfect entry where everybody can see the you know what I mean, the obvious level for you to go long and then do something like that. More often than not, market won't give you that. Market is going to make sure you're going to continue to miss out. If you have missed out one time, you're going to continue to miss out. And I've said this before. When is the market going to see a steeper pullback? Well, once these people just sitting there watching this going higher and higher and higher, right? And they just can't live with themselves anymore, right? So then all these people finally start chasing back up, right? That's when we're probably going to see a steeper pullback. Market is so insidious like that. But as far as the long-term trend is concerned, this is great. This has been a great run, and what a pleasant run it has been, right? Let's continue diamond here, and I think, you know, I think it's going to continue higher, but again, I think, you know, I've been targeting 300 this year, and I think we might get there, 295, 300, and then we may see some volatility at that point. So let's continue to kind of keep track of that on a weekly basis. Again, diamond as well, right? We saw that more of a, you know, symmetrical triangle pattern. You see how like these technical patterns are playing out almost perfectly now? You know why? Because there aren't many people in the market. This is a reason why when you start to see these levels are working out perfectly. Remember, when there are a lot of people, it is chaotic. Market always becomes chaotic when everybody want to jump in. It's like that anywhere, right? This is why I do not like crowded places. I mean, there are many places, there are many people. I mean, any events you go, there are a lot of people, it always becomes hectic and chaotic. Same thing in the market, right? So you can see we had a very good consolidation. That's a good consolidation. I mean, after this kind of move, we throw that bull pennant pattern there, and we saw a gap up and very, very clean breakout. And I actually tweeted out and said, well, this breakout is so clean. I don't know if market will like that. I guess people are still scared, so the market continues to move higher, right? Continues, because people have been seeing these patterns fail so many times. How many times should I go up and then just goes right back in, right back up, right? But with these gaps that we have on diamond, even if we pull back, those gaps are going to provide us support. This is the reason why it makes sense to track gaps for reference. So let's continue with the Qs here. Qs. Very, very close to the last gap. We've been tracking this gap here. Final fill that gap, and we got one last gap. We're only away, less than 2% away from the all-time high. And can you imagine, just about 2 months ago, right? Everybody was calling for a major, major market crash. 2 months later, we're near all-time high. And same thing happened in early 2016. It happens almost every single pullback, right? Every single pullback. Q is looking very, very good here. Once this gap gets filled, we're probably going to see some volatility or something, or at least a pause or slow down. Russell 2000, right? Russell 2000 still not near all-time high, but this thing came down much harder than other large indices here, these large cap indices, but the small caps is doing very well here. Came down, we saw some consolidation and then another leg lower. We got up, we got the bull pennant, and then looks like we might see another leg higher. It's interesting how everything playing out almost perfectly. These technical levels are getting respected almost in a perfect way. And then when I see that, I know that there are still many people very scared. There are many people, I'm talking about retail traders, there are many people like going long at it. This is a reason why things are playing out in a more of a docile manner. Market is respecting these technical levels almost perfectly. Let's go to semis here. Semis, right? Semis. We've been talking about semis as well. I mean, everybody thought this was gonna be the major crash signal, right? Made a new low. I mean, yeah, in a sense, we were in an intermediate term, a bearish trend. Intermediate, not primary. If you go further out, you realize we're still in a primary term uptrend. So we were lower highs and lower lows, and then we made this low and looked like this was topping pattern. Probably a lot of people thought that might have been it. We made another lower low. This thing is going down. How many people do you thought they were shorting the semis? And again, if you don't understand the major long term, that's a lot of times it happens, right? You look at this and well, there you go. That's a topping pattern, man. That's a topping pattern. And then what does the market do? Boom, reverses on you. And semi is what? Only less than 1% away from the all-time high. Less than 1% away. This thing just went straight up. Let's go to banks. Banks lagging. Remember, what did I say last several weeks? What is going to be the catalyst of the market to continue to grind higher, right? Because, I mean, it has already moved up so much, right? That's what we've been talking about last several weeks. It has already moved up so much, and what will be the catalyst? Well, there is these sectors that hasn't been moving. One of them is banks, right? The energy is another one also. And we're also going to talk about the home builders here. And another is the home builders. Once you start to see this, that there's a sector rotation, right? The money rotation occurring, that's when you're going to see, because these beat down stocks or sectors that hasn't been moving well, they're going to start to see move. And that's what's going to fuel the market to grind and move higher. And that's what we saw here. You can see we saw them when these levels, I didn't change it from last week, and check it. And again, the gap area provided support 25.30 on 24.86. That's what we saw. And think about this though. Think about that. A lot of people are scared. There's very bears. They see these higher lows taken down. They look at this as a short setup. This is why you do not want to look at things on such a short-term manner, because these things happens all the time. Do not look at it like that, because once you look at it like that, we'll say, oh, look at that, we just made a lower low. That's going to be a bear flag and then continue lower. It doesn't work like that. You have to understand intermediate and primary term trend. I mean, again, especially when other indices are in a bullish bullish sentiment, right? And a lot of people are saying, well, what about the banks, man? The banks, bro, the banks are weak. So they're saying because of these other sectors are weak, they're saying that it's going to bring other indices down or other sectors down. No, it's actually the opposite. This is why we start with the S&P and Dow and Qs. These sectors are going to go up first, and then there will be a lagging sectors. They're going to come later. And that's how the market is going to continue to grind higher and higher and higher. Let's go to the home builders. Look at the home builders. I mean, home builder definitely saw some big, steep decline, but look at how much has progressed so far now. Look at that, right? Home builders is up 22% year to date. I mean, it's from the lows, it's up almost 32%, right? But you can see we came down. This was a major pivot. That's the major pivot. You can see that that's a downtrend there. We're just breaking on. This is a very constructive sign in looking at things over the longer term, right? Looking at things in overall perspective as well. We saw financials going up. We see home builders going up. These stocks, these sectors, these lagging sectors are going to keep the market prop up. Next couple weeks, even maybe more, we're gonna have to see some shenanigans. But I believe that until these lagging sectors to make its move to all-time highs, and that's gonna push these large indices to make higher. I want to start with the Twitter and stuff like that, because you guys know that Twitter, Intel, and those are three that I've chosen to kind of share with my current holdings. Obviously, I'm holding many more, but those three are obviously here. So Twitter, let's quickly talk about it. Twitter, we are building a base. If you look at this here in Intel, they're almost identical setup. Look at that, went up, came down, we build the base. 6-9 months or something like that, and then Intel already broke out. But Twitter is, it gone up, pulled down, we're building a base. It hasn't gone up yet, but I think Twitter is going to, right, follow the footstep of Intel, where it's gonna go and start filling these gaps. Again, this is a pretty large gap. Once the stock starts to get in there, it's gonna see some volatility. When you see especially a big gap like an earnings gap, there will be some up and down movement there. But I think it's gonna slowly find some traction to the upside. I mean, long term, when I look at my long term chart, it looks bullish, and I've been bullish on Twitter since, you guys know, that 1950s. This is when I first wrote, December 18, 2007. This is part 1. We're up to part what? We're up to part 4 now on Twitter. But I've been long since, this is a monthly chart there. I've been long since actually 1950, and I start adding more, and been buying the dips ever since. I'm a long-term investor since 20. Been buying the dips ever since. Every dips I can find, I've been buying the dips. I've been pretty much adding throughout this year as well. Let's go to Intel. Intel, same thing. Intel's done very well. If we go back here, Intel, this is part 1, right? Intel set to soar part 1. I wrote this December 13, 2016, but we're up to part 8 now. A month ago I wrote that, part 8. But you can see in this chart right here, look at this chart, right? So I've been long about 35, 34, 30, 50, 35 is when I started going long on here on Intel, and I've been buying the dips and been holding full, right? I've been trading on Twitter and Intel. I've been trading some calls, like I buy some calls, close out, buy some calls or something like that, right? But I've been adding shares, holding full, right? That's how you grow your portfolio. If you're convinced, if you're convicted of a long term of things of this market, right, and you know that the market is going to get into a bullish uptrend for the next 5-10 years, and you're convicted of that, and you're confident of your analysis and its forecast, when you see a pullback, you look at that as opportunity. That's the difference. While everybody looks at what's happening now and start getting scared, when you understand the big picture, you look at the pullbacks and as an opportunity. That's the reason why, man, when like late last year, early part of this year, when we saw 20% corrections, I started buying triple shares on everything. On every single indices, Spider, Diamond, Qs, Russell, Banks, everything. And this is the reason why I was able to get a pretty outstanding return so far. Let's go to Apple, right? So Apple, so this is article I wrote January 30, 2019, heading 30, and that's pretty much chart there. This is a long-term monthly chart, and I actually started buying a little early up here, and I start adding, and this was when I was adding actually more, but I started getting a little bit earlier on that, but that's okay because Apple is now trading at 197. I think Apple's going to 300, 320, 370, possibly even 400, but 300 is kind of a conservative target that I wrote in the article, Apple heading 300. But in that article I talked about, you can see that first target 300 and then 320 and even possibly 370. And also you can see on this chart, you can talk about how fast we saw about 40% decline. Look at 10 months, it took 10 months. That's a bear market. 12, that's a bear market. Took 3 months. And people think that when it comes down so fast, so quickly, that's even more bearish. It's actually not. When you see a fast decline like that, you will see a fast move back up, and that's exactly what we saw on the S&P, right? We saw how fast this thing came down, and just as fast we just got right back up. That's exactly what we're gonna see on Apple. I mean, we're gonna see up and down shenanigans like that, and it creeps up on you. Trust me, these things. I remember it felt like Apple was never going to move because I was buying the dips, man. I'm like, dang, Apple ain't gonna move. And then out of nowhere we saw gap. I was like, okay, and then we're already here at 200. You know, these things creeps up like that. This is why when you're so concerned about short term, you always miss opportunity. You always miss opportunity really to accumulate. Right? Accumulate wealth, accumulate and see growth in your portfolio. If you're in and out, man, that's not how you're gonna make money in this market. I'm telling you, if there's anybody who they tell you that you can make money day trading, I'm not sure if you're day trading, but just look at you get past performance last 3 years. It's not about how much you make now or this week, this month, but you know, over the course of last 3, 4, 5 years. Because our job is to, you know, accumulate wealth, grow our portfolio, capital appreciation. It's not about it's always the poor mentality is always wondering about how much I can make this week, because they're always concerned about, you know, how much can I make this week, how much can I make this month. The wealthy mindset is how much can I make next 2 to 3, 4, 5 years? Where my account be next 10 years? Once you start looking at thinking like that, then there's real growth starts, not just in your account, but in your own, you know, in your own self as well, because you look at things in a more of a longer term, and obviously to be able to look at things longer term, you have to forecast the longer term, and that's kind of what I do for my members. Here to kind of go through these levels and understand what the long-term consequence is. And once we understand, obviously any analysis, any forecast, things could change, right? Things could change. And so this is why we can constantly analyze, trying to figure out, is this gonna be just a pullback just to scare you out? Or is it really gonna be a crash? And I have, you know, a lot of tools to be able to forecast that. So this is only for investors, that if you are somebody who, you know, likes to accumulate stocks for long-term hold, or if you're somebody who wants to start maybe investing in the market in a long term. Usually it's $500 a month for investors and $4,000 a year. But with today's special. And I didn't have planned to do this today. I just accumulated so many new names this week that are just they're just very, very undervalued, very extremely undervalued, that has potential for growth. And doesn't mean I'm always right. I've made wrong trades and I've closed them out with loss and things like that. But I think a lot of these have high probabilities of doing very well, especially that I am forecasting the market is going to be great this year, next year. At least this year, next year, we're going to have a great year. Doesn't mean we're not going to see like 5, 7, 8% corrections in between. We will. I think we may see something like that maybe in May or something like that. But for long-term investors, those pullbacks are what? Opportunity, right? Because if you understand the long-term implication. This special will expire Monday at noon Eastern time. So you got some time to think about this. It's $350 monthly or $3,500 yearly, and you can sign up through click on this there for investor membership. So investor membership, obviously you're gonna hold things long. You're gonna hold things much longer. So there will be monthly video. So that in the monthly video, I go through every single one of my positions and we'll review and forecast for the month again. And in between, you will have market updates, member market updates with some position updates if I'm gonna get into, and you have updates if I'm gonna get into a new position or gonna add more. You get that throughout the month. So it's not like just monthly video and then completely forget about it, but you would constantly get kind of updates. And there are some midweek updates. Not every week, but there are some updates, video updates as well. So obviously long-term stock pick, and these are not just stock picks. Just I say it's gonna go higher. I'm not gonna give it to you unless I'm getting into it. You know what I mean? I'm gonna put my money where my mouth is. I'm not just giving you a stock picks because I think I'm gonna buy it, and you only get picks that I'm going to buy. I will buy those if once you get those stock picks in your, and also you're gonna be access to special report video lessons. Special report, obviously, I got tons of videos. I think like total 5-6 videos. Forecasting, very in-depth videos, psychological reason, technical reason, and fundamental reasons of why we're going to see a biggest bull market in history, and that's the exclusive report. And video like this, I have a lot of them for members, so you fully understand the long-term implication and the expectation, right? And once you understand those long-term, then when you see quick drawdown like that in the market, you look at that as not something to be scared of, but something to see as an opportunity, right? So this is just as of today. I just pulled this yesterday. Again, I was able to achieve this is because mostly because I didn't close out any of my positions when we saw that decline, right, on the S&P here. When we saw that, I didn't close out any of my positions. None. Nothing. Zero. And then I started buying what? I started adding more. So you kind of, you know what I mean? It helps you. So it was fortunate that it played out. And again, when you're so convicted and you're confident with your long-term analysis, then it kind of gives you, and it was tremendous opportunity. And keep it in mind though, this is achieved with also options trading, not just buying stocks. It's just also with options trading as well. So yeah, that's the membership there, and I go ahead and put that link there. You can go ahead and sign up here. It's a $350 monthly or $3,500 yearly. And people ask me why, the membership is pricey compared to people you follow on Twitter. I don't. Here's what I'm gonna say before I let you guys go. I don't believe they make money, man. I really don't. And ask them. Go there and ask them if they can provide last 3 years performance graph, not just track record from an Excel sheet, but from their brokerage. And you're gonna have all this information or member section from since 2014, so you'll know exactly how I've been getting returns and things like that. And there's a reason why, if they're so good, there's a reason why they don't share. These guys don't share performance P&L. Is big. If you ask, they'll probably block you. It's because they may make these stupid calls on Twitter, but it's completely different than making calls. Trading and doing teaching is two completely different things, guys. It's two completely different things, right? You could say this looks bullish, doesn't mean you actually went long, And so I try to keep my members group small. And I want a serious people, and this is not again for day traders or short-term traders and freeloaders, and this is for somebody who's is for solemn traders and investors. And so this is why, and I go around and look at it, and you can go ahead and it's a service. You're gonna get what you pay for, and I think this is how much it's worth it. But anyway, I hope you guys enjoyed this video today. And again, if you're inclined to sign up, sign up. If you're not, that's fine. Continue to follow me on Twitter and watch these videos. I'm happy to interact with you guys on Twitter. And hope you guys have a wonderful weekend. And I'll talk to you next weekend.